Since 2008, Global X ETFs have been committed to empowering investors with unexplored intelligence solutions. Global X specializes in exchange-traded funds that offer exposure to the artificial intelligence ecosystem, including themes like data centers, robotics, semiconductors, and cloud computing. To learn more about Global X's entire suite of ETFs, from covered calls, fixed income, emerging markets, and more, visit globalxetfs.com. Welcome to Animal Spirits with Michael and Ben. I want to start the show by thanking all 1,300 of you that filled out the survey. Thank you very much for doing so. A little bit surprised that our audience of financial professionals is smaller than I would have thought. However, I have a hunch, Ben. I have a hunch.
Okay.
What if the financial professionals are not doing their part? What if they're not filling out the survey? Because they say, we'll let the other people do that. If you're a financial professional and you are listening to the show and you would like to do us a solid or not, there's a link in the show notes. Please, we'd like to hear from you.
Listen, if we poisoned the well being an anti-survey podcast,
that's on us.
That's not on us. You need to help us.
No, that is on us.
Well, it is on us. But you need to help us by putting in the right answers, because we're not trying to lean you one way or another. We just want to know some general information.
All right, so Ben is coming to us live from... Are you in the Dominican Republic?
Yeah, Punta Cana, Dominican Republic.
All right, I'm not going to say that I thought Punta Cana was Mexico. I'm not going to say that. I'm also not going to ask. I'll ask. How are you an hour ahead? How is that even possible? I thought most places were behind.
Not going to lie, I did not realize we were somehow passing some... I time traveled to get here. I flew through Bermuda Triangle or something.
All right, given that I wasn't exactly sure where Punta Cana was, I joke. I might have known that it was the Dominican Republic. Who's to say? I kind of thought that was like due south of the East Coast, but I guess it's to the right of the map.
Well, there's many beautiful places in the Caribbean. This is one of them. Great people. I have some travel thoughts. I don't know if you want to get into it right away or save it.
No. We could save it.
Okay, it's on the travel section.
All right, let's get into the stock market, shall we?
Okay, let's do it.
Okay, where do you want to start?
You got to hear some stuff on this is the top. Are there top callers?
Oh, you know what? My bad. I deleted that stuff. I put in the what are your thoughts stocks. We're going to skip that.
Okay. All right. Are you worried that things are getting toppy, or are you worried that people are worried that things are getting toppy?
No, in fact, what I had in there that I moved over to the what are your thoughts stock are all of the things that people said up to now had been the top. For example, the NVIDIA watch party. That was like a 20% ago.
Oh, yes. Oh,
you know what I mean?
How about when the CEO signed the woman's bra or whatever behind her chest?
Yeah.
That was going to be the top? Okay.
Yeah.
Chart Kid Matt did an annual sector return form going back to 2014. Total returns, and surprise, surprise, technology is at the top. It's up almost 800% since 2014. The second place is just consumer discretionary, up 271%. So technology, obviously dominating. Not surprising, I guess. This is pretty nuts from Bloomberg. So they looked at the California budget, and they say that stock pay at the 4 large tech companies accounted for 10% of the revenue in 2024 in the first half of the year for income tax withholding. That's NVIDIA, Alphabet. Dang it, I called it that. I meant Google. NVIDIA, Google, Facebook, and Apple. The top 1% of California earners pay nearly half the state's personal income tax collections.
You know, Ben, I don't know that I've ever seen you in a hat. And also, you're breaking your rule. I believe it was you who said if you're over 40, you can't wear a backwards hat. That was you, no?
Oh, that's definitely me. I said once you become a dad, you can't wear a backwards hat. Guess what? I'm a middle-aged guy now, and I'm going through a midlife crisis, so backwards hat. I just came from the beach, went for a nice walk on the beach this morning, and my son was jumping with joy because there's been a lot of waves here, and they've been some red flags. We couldn't go in the ocean. Today was a yellow flag day, so he was psyched.
Fair game.
After this, I'm going to go get pounded by some waves.
You know, just back to the not top stuff. Let's just say that we are near some sort of top. I feel like the Jensen bra thing, the NVIDIA, like how much time needs to pass? You know what I mean? Like, because if this is a top, even though it wasn't like the exact tippy top, if after the signs of the top, we ran another 20% and then we fall 30% and we're talking like 5 years in the future, we'll still say that those are pretty good signs at the top, no? So I feel like it's
There's
too
going
early.
to be something
It's too early to be super dismissive, is all I'm saying.
Yes, and there have been a million things that have been said about anecdotes of, okay, this is it, and something is going to do it, but it's trying to guess which one it is really difficult.
Now, if we were to zoom out and take a look at and plot all of the signs of this is the top, that people were saying this is the top, all the magazine stuff over the last 10 years, we'd have a long list of things, right?
Yes. Yeah. You did a good job of doing this on, I guess yours was more risks, but yes, people have been calling for the top since I think 2013, really.
All right, and here's another potential wall of worry for us to climb. Although, actually, this is not a wall of worry, but it's just potential reason to be concerned. Not a wall of worry. Bank of America. U.S. stock market concentration hit record high in 2024. All right, so they're looking at the top 10 companies as a percentage of the total S&P 500 market cap. And at the peak of the 2000 bubble, Microsoft, Cisco, GE, Intel, Exxon, Walmart, Oracle, IBM, Citigroup, and Nokia were roughly 27%.
Who was the one who said that this is a bull market phenomenon and then the bear market things? Because you can see in 2022, this reversed.
Mobison.
Okay.
Yeah,
so this reversed in 2022.
Mobison said concentration is the features of bull market. That's sort of be careful what you wish for. Nevertheless, I don't know that extreme concentration is a good thing. So the top 10 stocks are now 36%. Microsoft, Apple, Nvidia, Alphabet, Amazon, Meta, Berkshire, Eli Lilly, JP Morgan, and Broadcom.
Do you think they're really going to like make Google spin out Chrome?
No.
Because that's they can't do that, right?
I don't know enough to say can't, but I would guess that they're not going to. Okay, so Nick and Jessica over at DataTrek tweeted, "We lose no sleep over an S&P 500 that owns heavy doses of outstanding global companies. As an index, it does something many active managers likely wish they could do. Take meaningfully large positions in superior companies and stay with them over the long term." And it's funny that this is like a courageous thing to say, even though it's pretty commonsensical, right? Because the knee-jerk reaction, I think everybody's spidey senses sort of tingle when you see a chart like that. You think it has to be mean reverting, which it doesn't. So I think Nick and Jessica say something that is, again, seems like common sense, but that people would be like, "Whoa, that's an outlandish take," or "That's a contrarian take." I don't know why it should be.
Can you imagine being a large cap growth or a large cap fund manager right now? Anywhere in the large caps industry? I guess in the growth sector.
That would be a large cap manager and then a mid cap manager, small cap manager.
It's got to be so difficult to look at these percentages and go, okay, I'm going to play or I'm going to overweight them to try to outperform. It's got to be playing huge mind games with you at this point. Those big top 6, 10, whatever it is. It's kind of funny that, so you show the names on here, Berkshire Hathaway being one of them. They're $1 trillion company now. It's funny to think that, this thing is past Buffett by. He's kept right up, kind of. They're one of the $1 trillion companies.
Speaking of signs at the top, when Apple crossed $1 trillion, I think that was 2017, but I'm not positive. That was people were screaming, right?
It's another one of those things where the numbers they seem outlandish at first, and then people get used to them, and then it's kind of like, oh, okay, this is it. We have $1 trillion companies now.
Yeah.
All right. I did a little reading on the way down. I filled up my Kindle before I left, and one of our readers or listeners emailed a couple weeks ago and said, "Hey, I got a new book for you." So I decided to check it out on the way on. It's called Boom, Bubbles in the End of Stagnation by Bern Hobart and Tobias Huber. Bern Hobart has a Substack that many of you might follow. What's it called? The Diff?
Yeah, I'm a subscriber.
Okay. And this is one of the better books that I've read in a while. I haven't read a good nonfiction book in quite some time. I pretty much just read all fiction these days because I feel like nonfiction, I don't know, I just can't get into it. This was very good. And I'll say this, not to pat myself on the back, but I think it's hard to do sometimes. Maybe I'm patting myself on the back. To disagree with something in one of these takes, but also really agree with other parts. So the whole point of the book is, I'll read you this. After the Manhattan Project and the Apollo program, whose major technological innovations, atomic bombs, nuclear energy, rockets, and semiconductors were largely physical, progress became increasingly confined to the virtual. And their whole point is that it's kind of hard to believe. They say progress is stagnating while innovation is still going. So, because I thought about this, I said, why are they so down on innovation? They're saying, listen, we haven't done anything physically. And they give this example where they say, listen, you can book a trip on the New York subway to fly from New York City to Tokyo and do it all on your phone. And that's great. But the physical infrastructure that you're riding on was built in 1970, and trying to build that same infrastructure today would be impossible. And so they're saying, yes, they're saying progress has slowed while innovation has increased. And it's basically just the stagnation comes from these breakthroughs have all been stuff in phones and technology, stuff that maybe makes your life more convenient, but doesn't necessarily make us push forward and push the bounds. And so their whole point is we need to have more bubbles, and they say it in a good way. Like they say the Manhattan Project was a bubble.
What, like to attract capital, or what
To
exactly?
attract capital and ideas and kind of just let things happen. And their whole point is kind of just we need to just let stuff happen and stop being so risk averse with all this stuff and stop worrying so much about what technology can do and just let things go. Which is
Yeah,
interesting.
but you know what? Like
because-
this is where politics comes into it, because I think people are generally risk averse, and it's so easy to win the electorate by sort of scaring people and saying like we can't do this.
Okay, so I listened to a podcast with Ben Thompson. He interviewed Bern Hobart about this book, and at the end they talked about politics. And I didn't really put this together. And I listened to a podcast with Brad Gerstner too, and he talked about this. And I never really put this together during the election, but now it makes so much sense. The Silicon Valley crowd doesn't think that Trump won the election. They think they won the election. They like Elon Musk is their surrogate. Because look at this. So. And they talk about the fact that they just want to let things run, and they want to
not entirely untrue. I mean, it's a reasonable. Did they not?
No, it is.
Did they not push him over the edge, or help to at least?
Oh, I mean, the richest man in the world spent a lot of money, so it certainly. So the Washington Post has a story saying that Mark Andreessen and Joe Lonsdale, he's the guy from Palantir, and Travis Kalanick are going to be on this DOGE thing to try to make things more efficient in the government. And I guess
who's going to be on the Who's going to be on the Shiba project?
But this was bound to happen. I guess Silicon Valley has so much money and power now. They're not these little upstarts anymore. They have a ton of power. So it's kind of like, I guess this was bound to happen at some point. What will they like the results? Will they like having less red tape is what they want. And they just want to do stuff and not have the government get in the way. I think that was their whole problem. And that kind of comes back to this booms and bust thing. So I think it's going to be interesting to see as an experiment, do they get into the government sort of get into the government, I don't know, the books or whatever, however the government works, and realize like, we can actually make some meaningful change here? Or do they look at it and they go, or do they get in there and they go, oh my gosh, I can see people have been trying to fix this stuff for years and it's impossible at this point. So it's interesting, but my whole point is, I think they see this election as kind of like, listen, this is our turn. Just get out of our way. Whatever party we're affiliated with, we just want them to get out of our way and let us do stuff. So I think it'll be interesting to see if they can do stuff now. Like actually build stuff and not just make apps for us.
I think regardless of your political affiliation, we should all be rooting for this experiment to work. Obviously.
Yes, but I can't believe I kind of missed that. Like, oh, the tech people, it's not like, for them, it's not Republican or it's not Trump. It's get out of our way. Let us tinker and do stuff.
Yeah.
And
all right. Well, no, you're right. It's going to be very interesting to see how they do.
Yes, if they can actually do it. Okay. I feel like this happens there. You and Josh had a great conversation with Cliff Asness. I snuck away to the gym the other night at the resort. Not to brag, nice little gym here. And I put on my headphones and I listened to you and Josh and Cliff Asness. And you talked about market efficiency. And I thought that was a really interesting conversation. It's for people outside of the industry, it might seem like splitting hairs, but I think it's an important conversation. But there was this news saying that investors confusing Bluesky with a Toronto blockchain company sent the stock soaring 1,800%, which is kind of funny that the fact that it's a crypto stock didn't do it. It was being affiliated with a new social media company. And the firm even said, like, listen, we're unaware of anything that happened here that caused anything for our company to do better. It's just it's a market efficiency thing, right? But what was Cliff's point? Like, okay, fine. You say the market is inefficient because these stupid stories happen. Fine, create a fund or a strategy and make money off of it, which is impossible, obviously.
Yeah.
Which was a good point. So this is from the FT. They show that Bluesky users have now overtaken Threads. And that happened in a hurry. And I'm starting, so its daily active users are closing in on 3 million. Threads never really felt real to me. We talked a little about Bluesky last night. I feel like it might have legs. I don't think you're quite there yet. Are you on the platform or not?
I just sent my first, what are we calling it? Sky?
I don't know if it has a word.
Blue? Sky?
Post?
I did
BS?
a meme. I did a meme.
BS.
I did my Michael Saylor meme. Did you see the,
what's your meme?
when Otto Octavius is like trying to control the sun and the thing with his arms. Remember Spider-Man 2?
Oh, okay. Gotcha. And that's the Michael Saylor?
So I said, Michael, I was going to say I tweeted. I wrote, when Michael Saylor and Microstrategy's market cap hits $47 trillion. And the caption is, Otto says it will stabilize its under control.
Oh, okay. All right. You said that to me and Josh. That was like you were trying it on Slack first.
Yeah.
That was pretty good. So I
Yeah,
think
thanks.
the best part about it
But
is
anyway, there's zero response, 0 likes, 0.
it'll take a minute. I think
Swing and a miss.
it takes a little bit. But here's the thing. You're starting from ground zero in terms of followers and such. And I know there's some people who will migrate over from Twitter, but it's actually kind of refreshing to start over and build your way back up. I mean, it is kind of annoying that you already built a following somewhere else and now you got to try to do it again. But here's the best part for me. It feels like there's a lack of permabears and psychos so far. And I know they'll come if this thing gets big enough.
Yeah, give it a minute.
But it does feel fresh, and I think it has legs. I think there's, especially in terms of the finance people that we follow, unfortunately, I think we're going to be dual screening it for a while. We'll see if it actually keeps going. I don't know.
It does seem, for whatever reason, this is taking up. But when I signed on, and I asked you what are your interests, and it shows a bunch of different bubbles with software development, education, food, journalism, whatever. You know what's not there? Finance. There's no business thing, which is odd.
Do you say degenerate movies?
So, yeah, I was on... I know it's lame to complain about Twitter, but so I'll move off this quick. But like, I hit the For You tab just to like see what was up. And the first thing was a thread of all different angles of the planes going to the World Trade Center.
Jeez.
And so I'm just scrolling for doom scrolling for 30 minutes, and I like threw my phone. I like snapped out. I'm like, whoa, what in the? So I have little interest in like tweeting again, but it is cool to see an alternative to.
See, some people were saying, oh, look at Ben can't handle being on Twitter anymore. I'm not leaving Twitter. I'm still there. I'm still tweeting. Come on, people. Yeah. But having an alternative is kind of nice. And I guess the one thing people are saying is, listen, there's no algorithm on this thing. It is just a feed. And you can follow your feed, and there's nothing that's going to be force-fed to you. There's nothing that's going to be, like, people are saying, if you post a link on Twitter, it doesn't work anymore. Or it gets pushed down. He doesn't want people leaving the site. And Bluesky doesn't have that.
Yeah. Okay. Yeah, no, that is nice.
We'll see.
So, all right, I'm. You know what? I'm not making any predictions into how I will use Bluesky. We'll see. All right. Todd Sohn has a chart that is a face blower. It's a single stock levered ETF volume, and he said, "Boy, that escalated quickly. I mean, that really got out of hand fast." And he's quoted the great Ronald Burgundy.
I don't have the tweet in front of me, but our friend Corey Hoffstein made a tweet last week making the astute point that there's a lot of these ETF companies that came out and said, we're going to do this kind of investing. We're going to do dividends or quality or something like this. And he said, so many of these places have just transitioned into 2 times this company or 1 times that company. And they brought in a ton of money. And how can you blame them if this is what people want?
Yeah, no, these are, and credit to Corey, I don't think he was blaming them either. Like, this is capitalism. This is what we're here for. I had this in the doc actually with Cliff, but I didn't get to it. Corey tweeted, depression is seeing that a 2x Microstrategy ETF with a 1.29 expense ratio has nearly twice the AUM of my firm. All right, let's talk about the economy for a second.
So wait. Is this just life now, or is this a flash in the pan kind of thing? It seems to me like this stuff is, every time there's a new hot stock, it's going to get more flows in terms of the double and triple levered stuff, right?
Yeah, no, I think this is here to stay. I don't know that it's like going to be MicroStrategy forever. In fact, it's almost certainly not. But this, whatever the hot stock is, this is how it works now.
So the strange thing about this whole market environment, it's been this whole decade, it feels like, is you have tons of money still going into index funds, right? Eric Balchunas always tweets about how VOO is like the king now. He's taking in all this money that's an S&P 500 index fund. You also have all this money that's trading meme stocks and trading double levered this and crypto, and there's $7 trillion in money markets. It's not like people are really picking one area of the market and this is it. There's stuff going on everywhere.
All right. So the question I keep asking is, where is all this money coming from? I continue to not really understand.
I don't know.
It can't all be coming from active mutual funds. You know what I mean? Like that can't be the source of all the capital. All right. So Donald Trump put a message out last night onto Truth Social. I think it gets recycled on Twitter. And let me just read it. He said, as everyone is aware, thousands of people are pouring through Mexico and Canada, bringing crime and drugs at levels never seen before. Right now, a caravan coming from Mexico composed of thousands of people seems to be unstoppable in its quest to come through our currently open border. On January 20th, as one of my many first executive orders, I will sign all necessary documents to charge Mexico and Canada a 25% tariff on all products coming into the United States and its ridiculous open borders. This tariff will remain in effect until such time as drugs, in particular fentanyl, and all the legal aliens stop this invasion of our country. Both Mexico and Canada have the absolute right and power to easily solve this long simmering problem. We hereby demand that they use this power, and until such time that they do, it is time for them to pay a very big price. And interestingly, the market didn't really react to this. Like this was after hours. You would have expected to see big moves in the dollar, big moves in maybe interest rates in international currencies.
Well, the dollar took off a little bit.
A little bit, but EWW, which is the Mexico ETF stock, it's down less than 2% today, which is, all things considered, what a big trading partner they are. It's not a whole lot.
Do you think Canada's up there going, what did we do, eh? Come on, we didn't do anything. Do you think Wall Street is hearing what it wants to hear on these policies, though? Because it feels like people on Wall Street and finance are pretty happy with his selections for the finance positions. So they're pretty. They think he's going to rein him in, or this is just a negotiating ploy. Do you think people are just hearing what they want to hear and assuming, well, he's using this as a negotiating ploy? Take him.
Yeah. Well, that's
literally not seriously, or whatever it is.
We're speculating.
Everyone is, but the market speculation seems to be like, it's not a big deal.
Well, but Trudeau said that there was somebody tweeted that they were going to speak. The leader of Mexico already reached out. So I don't know if this is going to go into effect or whatever. The market seems to not be concerned. But Ben, you mentioned that Wall Street is happy with Scott Bessent, the new incoming Treasury Secretary. And for those of you who don't know who that is, he's a longtime Wall Street guy, was a chief investment officer at Soros, started at the time was the largest macro hedge fund in the world. If you're interested in learning more, our friend Ted Seides did an interview with him. Mike Green had a really good conversation with him recently. And he seems to be, by all accounts, and I've only discovered this man, in the last week or two. This is not something that was on my radar, but he seems to be incredibly reasonable. And I feel, again, the little that I've seen of him, I feel very, very happy that there's like a sober, rational person who's going to be effectively the chief financial officer of the United States. It's a pretty important job.
And maybe that's why Wall Street is not that concerned, but who knows? I guess we shall see.
We shall see. But I was very happy with that news.
So is this going to be? I was thinking of this tariff things, but companies have to plan for this, right? And people are saying if he does if he does that immediately, because the U.S. automotive industry gets so much from Mexico in terms of supply chain, like that decimates the auto industry. So this is going to be like a recession where people try to get ahead of this.
So Sam tweeted a chart from Goldman, and it shows. So this is Trump enacted tariffs in his first term, and there's a chart showing the PCE for prices across 9 tariff impacted categories, and the PCE for all other core goods. And when Trump implemented his tariffs, the inflation for the tariff impacted categories did go up quite a bit, but it had no impact on all other core goods. It's not to say that it won't this time, like maybe it will, maybe it won't, but the point is last time it didn't, which is encouraging.
Right. It just depends. Are they bigger this time? So this is from Wall Street Journal. American businesses are dusting off a playbook they used during Trump's first term, stocking up on imported goods before tariffs are enacted. They're also considering how to cope with the levels if and when enacted. So they're trying to get ahead of this. Do you think that makes it kind of almost like remember companies kind of got all like in a fetal position, like planning for a recession in 2022 that never happened? Is this going to be a situation like that where they plan and they pull us all forward, and then if it doesn't happen, okay, now what do we do? Are there waves and waves of impacts of this as people try to figure out what is actually going to happen?
I think we'll see. I always defer to the market. So I think on the one hand, I take a little bit of comfort in the fact that the market did not freak out over this. On the other hand, we'll see. It's 2 months away, right? So we shall see how this plays out.
So the thing that we've hearing for 3 years now is, listen, it's not the inflation rate, jerks, economists. It's the level of prices. So even if you get a one-time up in prices, how are people going to feel about that? CBS News had this poll about Trump's transition. They asked people like 50 different questions about how do you feel about stuff. And they asked him what their highest priority was. And they talked about deporting immigrants and cutting taxes and tariffs and DEI stuff and all this stuff that people have said is a Ukraine in the US. And the number one highest priority was we want lower prices of goods and services. Right? They don't just want inflation to fall. They want lower prices. This is what people say that 80% of people said this is a high priority. There was not even another one close to there to even tax cuts. This was higher than that. are we ever as a nation going to understand how inflation actually works? Because I don't think we are. Collectively.
No. I mean, but that's okay. I mean, how would everybody be an expert on price levels? You know what I mean?
Yes, I think that this is just a lost cause, though, of explaining. Like, actually,
because what you're saying is, listen, for prices to fall, the economy will need to be in a bad place, and you actually don't want that. But guess what? I think some people do, because and Josh made this point very.
No, but they're not going to. People aren't going to take a 20% haircut in pay to have lower prices. They'll go no.
But they don't necessarily have to. Like, unemployment can go to 6%, and prices could fall, and I think the 94% would say, "F it, 6%." That's not my problem.
Even in the 2009 crisis, prices, we had deflation for a blip. It was not a mass fall of prices. It was prices kind of slowed, but so did wages.
It's possible that some category prices fall. I don't think it's impossible.
Sure, JCPenney could have a 50% off sale, but that doesn't mean that. But I'm saying if you want a full scale, we're going back to 2019 prices, you need wages to fall. There's no other way to do it.
Yeah, I would agree.
Okay.
All right, let's talk about crypto for a little bit, which is everybody's favorite category around here.
Well, it's both sides. This is a market. Some people say, listen, keep talking about crypto, guys. I think it's interesting.
No. Not really.
You didn't get any of those? I got a few of those emails.
Okay, I'm saying the people that think it's all a scam and tulips are like, guys, enough with the crypto. And by the way, the guy that said to me in the airport, I'm not having it, we had a lot of people saying, he was saying, I'm not having it. There's no way. There's no way.
About 100 people made that joke, which was a pretty decent joke, but he would have had to give you a wink if he did that.
Yeah, we walked away awkwardly.
I think people were trying to be funny when they said that, but
no. I think people were earnest in the email. There was none of that. He was sincere. We walked away awkwardly. There was no smile. And if he did come up with that, it would have been like the quickest joke ever, right? Because he wasn't planning to see me in the airport. So anyway, not a funny joke. Yeah. So I'm here. So people that don't like us talking about because they think it's a scam, and then like the real Bitcoin people who are like, you guys are such idiots. You don't understand it. You don't get it. You're missing it. All right. Well, great. So anyway,
that's true.
We'll keep this brief and. Matt Hogan.
I have something to say.
How about this? We're not going to keep it brief. This is my podcast.
No, I want to talk about this because I've gotten some ton of feedback. So I've been talking to you for a while. I think on last week's show, I said, when it hits 100, I'm selling. And finally, it got to 99 and change. And I thought, I got to do it. And I pulled the trigger. And I sold 25% of my Bitcoin position. And I just did it. And I put another limit order in to sell. And I didn't want to do it right at 100 because I knew if it hit 100, something weird could happen and a bunch of other people could sell. So I did it at 99. I sold some. I got to say, it felt kind of good. Like it felt like a weight lifted off my shoulder. And I said the reasons I'm doing it. I'm rebalancing. It's a way bigger position. It's almost 10% of my portfolio. It's bigger than I ever thought possible. You get huge drawdowns in Bitcoin. And I said I'm practicing regret minimization and I'm doing the Grand Rapids hedge. Right?
Somebody emailed us, what is Ben going to do about the taxes? And I assume you're just going to pay them?
Yeah, no, you don't have to pay taxes on crypto, I heard.
Yeah.
Once January 20th happens, there's no tax on crypto. I am still holding on some ETH. I think I had pretty much the market weight of 80-20 or so. So I'm holding on that because that didn't really catch up as much. But I think on my cost basis, I was up 6 times or something on Bitcoin. And I couldn't, so I'm rebalancing and I'm using it as a constructive portfolio management way. And if it crashes again, I'll buy more probably and I'll rebalance back into the pain. And I had a bunch of crypto people kind of say, people were writing, there was blog posts written about it and people were commenting. And I had a lot of crypto people say, you know what? This is a very reasoned argument. I appreciate that. You're still an idiot.
Overruled.
so I kind of they're like, the government's going to make it a reserve currency and it's going to go to 400. And guess what? That's why I only sold half or a quarter. I'm going to sell another quarter if it goes up. So that's why I did that because I didn't want to look like an idiot either way. So that's why I spread my bets. And I always say investing itself is a form of regret minimization. You have to take a risk one way or another. If you're all cash, that's a risk. If you're all stocks, that's a risk. If you're hedges, that's a risk. The famous Bogle quote was he had 50% of his portfolio in stocks, 50% in bonds. And he said, when stocks are doing really well, I wish I had more in stocks. When bonds are doing well, I wish I had more in bonds.
Yep.
So that's the whole point of it. And so that's why I did it. And
credit to you.
I'm happy with the decision. I'm at peace. Until it goes to 150, then I'm going to be pissed.
Well, listen. Being at peace is a good place to be. It's the only place to be when you're investing, especially in something as volatile as crypto. Matt Hogan tweeted, 95% of the world's largest investors have zero exposure to Bitcoin. but 95% of all Bitcoin is already owned. Well said. So for me, that's always been the driver. It's the supply demand imbalance.
You're just an Econ 101 guy.
Pretty simple. It's not to say that prices can't go down or crash. They can and they will at some point. All right. The Michael Saylor stuff, the MicroStrategy stuff.
Look at this chart. It's the most ridiculous stock chart in history.
It's wild. So for those who are unfamiliar with the story, I know we went over it, but it's so crazy. MicroStrategy last week was the number one most heavily traded security in the United States, ahead of Tesla and Nvidia and double SPY and in front of everything, okay? MicroStrategy is a software company that loses money. It's not really a software company. It's a Bitcoin treasury company. That's how they describe it. And I watched, so you see like clips of Michael Saylor on CNBC, and he says a lot of crazy shit and things that really make no sense at all, like really and truly. But I watched a longer video that Corey Hofstein posted, and the first 25 minutes, Michael Saylor did a really good job laying out exactly what he's doing in a way that you might think it's crazy, but it's one of the greatest financial engineering schemes in the history of Wall Street, like hard stop. And I wrote a post about this, and I said, somebody said, oh, he won the lottery, this and that. No, I mean, yeah, he did, but he called his shot.
Yeah, he's been laying this out for years, right?
Yeah, he called his shot,
yeah.
And then he smacked a grand slam. This wasn't like a mistake. So anyway, what he's doing is...
Yeah, you wrote a blog post about this, and you said this is for normies to understand like what he's actually doing.
Yeah, so I tried to explain it that way. So he's issuing convertible debt at effectively different interest rates, but like close to zero, right? So he's getting free money, and he's immediately buying Bitcoin. And it worked, right? The price of MicroStrategy went up, Bitcoin went up, the convertible bondholders converted it into equity, they made money, and then they did it again. And then they did it again, and they did it again and again and again, and they keep doing it. And it's spinning really quickly. And the way that he described the strategy with the options market and the liquidity, and like it's compelling, and it worked. And now the question is, when, how does this end? Does it end today? Does it end at a much crazier number? Because what did I say? If it keeps going at this pace, by next year it'll be the biggest company in the world. So it hit
like a $90 billion.
It hit $115 billion market cap, which is bigger than Starbucks and Nike and all these other monster companies. So you might say this is the craziest shit ever. This is going to end so badly, and you might be right. But it also could get a lot dumber, or it could end today. Who knows? But the point is, it's wild. It really is the greatest spectacle like I've ever seen in my career.
I have two things. I don't know if I'd say that because there's been some crazy stuff that's happened, but it feels a little like...
Wait, hold on. What's crazier than this?
I don't know. Oil going negative. I don't know. There's so much crazy stuff that's happened in the last 4 years. It's hard to pick. I'd have to think through. It's like asking me what's my favorite movie. I can't do it right off the spot.
To me, this is the number one.
Okay. So I have two things. One, this feels a little bit like Tesla in that, remember all the people shorting Tesla were saying he's never been able to raise enough money, and every time Musk was able to raise money and raise equity, and that kept Tesla going, even though people thought it was going to fail. Number two, here's what I think makes, obviously people say, well, if Bitcoin crashes, this thing's going down. Of course, because it did already. Wasn't it down 90% during the last crash? So here's the thing that I think makes it not end badly, but just end is, and Josh talked about this a little bit, but I have a further take. So it's other companies starting to do this. And remember how Berkshire used to have a premium on book value? So the underlying holdings of Berkshire, people would pay like 1.5 or 2 times for them. So right now people are paying 3 to 4 times the value of Bitcoin for MicroStrategy. Mm-hmm. It's just, if other companies start doing this and they don't have as big of a premium, investors are going to say, why would I want to own MicroStrategy in their levered Bitcoin play when I could get this other levered Bitcoin play and we're not paying a bigger premium? So if other people started doing this, their premium will just shrink, and their premium goes from 3 or 4 to 1 to 2, and that's what makes it stop going up forever. So it's a faith-based thing.
Yeah, it could. That's not a bad take. Anyway, so a lot of the people that are investors in MicroStrategy get upset when normies like us like sort of are condescending or mock them. And I'm not trying to do that, for the record. I think that there's a lot of really sophisticated investors on Reddit boards that understood exactly what Saylor was doing and made ass loads of money. And to those people, I earnestly say congratulations. To the people that are FOMOing in, who don't really understand what's going on, I'm talking to you, just be careful. So for example, And then there's a good article in Bloomberg about like the market makers and the people that are supplying the swaps and the leverage to like literally they're double levered MicroStrategy instruments, which is a whole other interesting chapter in the story. So there was an article in the Wall Street Journal covering it, and they highlighted Chase Fury, a 25-year-old trader in Newport Beach, California. He started buying Bitcoin-related stocks, hoping to turbocharge his gains. He moved all of his investments worth about $112,000 into the Defiance ETF, and has grown his portfolio to about $400,000. The Harvard graduate, okay? So to the point of, no, don't laugh. This kid's not...
It's funny to think about it this way, though, because he probably learned all these different discounted cash flow methods, and he's YOLOing
Yeah, but credit to this kid, because obviously he's incredibly intelligent, and he saw what was happening, and he made a lot of money. But his parents he convinced his parents to let him manage $700,000 of their retirement assets. I'm guessing they were well off, but who knows? Who knows if that was like 100% of the portfolio or 10%. He said he came up with a less dangerous and smarter plan for them. He invested 27% of their portfolio in the Defiance ETF and the rest in MicroStrategy. The money's more than double.
I'm not on board with that. I think that's a dumb idea.
I mean, for your
his
parents'
retirement strategy.
Agreed. For your parents' retirement
if you're looking at the outcome, sure, they're great, but that
so anyway, does this end badly today? Does MicroStrategy double from here? There's no outcome that would surprise me.
But this is why Bitcoin is up a lot, obviously. And even that is not enough for people. This is why bubbles will always be it's a permanent part of the process. People are never satisfied with just saying, hey, there's big gains. I need bigger gains. And this is why this stuff will always happen.
Yep.
Okay, the Wall Street Journal has a piece about America's piggy banks, which we've been talking about for a while here, hitting up the home equity lines of credit. We done with crypto before we move on?
Yep.
That was it? Okay. I think we gave it ample time. We're going to have to do a stopwatch, I think, to figure out so we don't go over. We need a shot clock on it so people don't get mad. So they show the value of home equity in the country is $35 trillion. And then they show the first-time homebuyers. And they're calling it a piggy bank and just saying that it's unfair because first-time homebuyers have gone from, call it 40-ish% in the 80s and 90s and 2000s. It's slowly gone down from there. And now it's at below 25. I think it's 24%. So I think the only people who, I mean, obviously there's still first-time homebuyers happening and maybe they're getting help or maybe they're just the people who are well off and can afford it. But it's just that the people who have money in their home are the few people who are able to transact in the real estate market because they have that equity to play with, right? It's house money, it's free money. They can roll it over and use it as a down payment. Those are the people that will be spending more when mortgage rates fall, not first-time home buyers.
I agree. One of the biggest themes of the last, I don't know, 3 years are first-time home buyers just getting absolutely railroaded.
Yes. And I've said for years now, of any group that got screwed the most during this 2020s period, it's first-time home buyers.
Yeah.
They just got unlucky and bad timing, and nothing they did on their part could have foreseen this happening, housing prices going up so much, and mortgage rates going up.
Mm-hmm.
Totally screwed.
Torsten Slok, in his daily letter, wrote, as home prices continue to rise more and more households are taking out HELOCs to finance consumer spending. In other words, homeowners are liquefying their home price gains and using the proceeds for consumption. Combined with low jobless claims, strong wage growth, high stock prices, and solid cash flows from fixed income, including private credit, the U.S. consumer continues to do well. And Ben, you've been talking about this for a while. This is, I don't know if this is going to put a floor into the next recession or if it's going to just continue to spur the economy, but people are tapping their home, and why wouldn't they?
It's gonna accelerate if mortgage rates ever fall. The Washington Post had a piece actually saying this is the biggest problem for Trump's economy right now, 7% mortgage rates. And how do you fix that? And I don't see, there's none that I can see any policies that he can do. They're going to fix the mortgage rate market because he wants growth to pick up and he wants.
What if we start buying mortgage bonds again? I mean, that's a solution.
That's what I've been saying for a while, to narrow that spread, but I don't know if people are going to be on board with that.
What people?
I don't know. Economists, people who make financial decisions.
Yeah.
All right. Email question. Just one, because we talked about this last week. Wondering if you could elaborate why it's a bad strategy to pay off or accelerate payments on a 3% mortgage. For me, I just don't want to be making payments for the next 25 to 30 years. Would rather get out of the mortgage and have the possibility to make income on it through rent one day. Thoughts?
Okay.
I just think it's it's one of the biggest financial assets you have, because after inflation and the interest expense that you can write off for your taxes, you're effectively borrowing at 0% in a 7% world. I don't know why you would ever want to give that up when the hurdle rate is that low.
It's not math.
Yeah, I say that I think it's not math on a 6% mortgage, and a 3% mortgage is math. How's that?
I agree with you. But like for people like this, like you're not going to convince them with numbers, right? Because this person is saying, I just don't want to be making payments for the next 25 to 30 years. It's not a numbers thing.
Yeah, and I still don't get. And it still doesn't make sense to me. And I
but
get where he's coming from, and I still don't get it.
I'm with you. And this is okay. People can disagree because this is a personal decision.
Yes, but he still shouldn't do it.
I agree.
All right.
Survey of the week, except for ours. Like and subscribe. From Matthew Miskin. He tweeted, a difficult element in tracking this economic cycle is that soft data, which is surveys, has been weaker than the hard data. Love this chart from NFIB showing the conversion starting, business, consumer surveys likely to be more indicative of real growth. So again, another huge theme of not just this show, but economics talk in general for the last couple of years has been the disconnect between the hard surveys and the soft surveys, meaning like, how is the economy doing? How do people feel it's doing? Okay. And the good news is that the soft, how people feel, it started to converge.
Wouldn't it be funny if this happens right as the hard stuff is starting to roll over? Like the sentiment comes back and then the actual numbers go down.
That would be funny. So this isn't just a Trump thing. This bottomed a couple of years ago, although it seems to be kicking into overgear now, to which I say wonderful, because if people feel better about the way that the economy is going, then the vibes will improve, right? That's feelings. And hopefully they will start to spend more and feel more comfortable at making investments. This should be good for growth.
Yeah, but the funny thing is that people still spend a ton of money when the vibes were down. So I don't know if it matters.
True. We'll see. But I think
the vibes have been totally disconnected from spending for a long time now. And I don't know if that ever.
Okay, that's not, you're not wrong, but I think it's good to see people feeling better.
All right. So you know the Tom Hardy gif from what's a Furiosa movie? Mad Max, where he goes, that's bait.
Yep.
This is from Axios. Salaries Americans say they consider the minimum to be financially successful. Boomers, it's 100K. Gen X, it's a little over.
Show me the survey questions. Show me the source. I don't believe this.
So I don't either. So Gen X says it's 200 something. Millennials say 180. Gen Z says $587,000 to be happy. The average is like 270. Obviously, Gen Z pulls it up. This is an engagement-based survey to get people mad on the internet. There's no way this is real. No way. Because a lot of people are saying, oh, see, Gen Z, they're so coddled and they're disconnected from reality. And there's no way this is a real survey that they think they need $600,000 to be happy. And boomers think they need 100.
Thank you, Ben. You're saying the truth. It's a fake survey, people. I can't prove it because I didn't see the survey, but I know it's true. I know it's fake, and you know it's fake. I had a friend send this to me. Yeah, this is fake. This is fake news. This is bullshit. There's no way. There's no way. Nice try. Not buying it.
All right, so I have a take here. I think we got a minor reprieve from income inequality and wealth inequality in the 2020s because of the pandemic, but that was an outlier event and it's a one-off. And I think inequality is just going to explode and get worse from here because I think the attitude towards inequality has changed. I think it's always been the case that money can buy anything, but it used to happen behind the scenes. Now it's in your face, out in the open. So here's an example. I'm a Michigan football fan. It sounds to me, so Michigan I don't know if you don't pay attention to this because you're in New York and people in New York City don't pay attention to college sports, right? So the number one football recruit in the country is a quarterback who plays in Belleville, Michigan, which is right down the street from Ann Arbor, where Michigan is. So Michigan should have had this guy, but LSU signed him. And then they had this NIL money, right, where you can pay college football players now or college athletes. And Michigan didn't do much of that before. And finally, they went to their rich donors and said, listen, all the other teams are paying a bunch of money. Ohio State went out and paid $20 million to get a roster last year. We need some money. And Dave Portnoy said, I'm going to give $3 million to get a quarterback. And little did I know, Larry Ellison's fifth wife went to Michigan. And Larry Ellison came off the top rope with, I don't know how much money to give this kid, but it's a ton of money. And Michigan flipped the number one recruit in the country to be their quarterback.
Oh, that's awesome.
And so for me, I'm thrilled. If I was a fan of the team that we took him from, I would be so disheartened. And this is going to happen. So my point is,
true.
So Nike has the Nike guy, Phil Knight, basically told Oregon, open checkbook. How much ever money you want for stadiums and jerseys and people on your team, I'm going to do it. So I think there's nothing standing in the way of the inequality train right now, because big money people, like, it's not like it's not taboo anymore to just push your money. It used to be like, we're going to do it behind the scenes a little bit. Now it's just everywhere.
Yeah. All right. So, I mean, capitalism has lifted so much of the world out of poverty. And unfortunately, this is what comes along with it is wealth inequality.
Yes. And
right?
For me, it means that I'm going to recruit in the country, so I'm happy. But
yeah, this is permanent. I guess you got to take the bad with the good.
My sense is it's going to get worse. That's where I've fallen on this.
Well,
maybe I'm making a leap here.
It's not going to get better unless, I don't know, maybe economic policies coming to the White House will improve growth radically. Who knows? Who's to say? I don't know. Hope it does.
Well, if growth improves radically, people who will benefit the most will be the rich people. But I just think there's no stopping this train.
True. All right, let's talk about driverless cars for a second. I saw our friend Tom Morgan tweeted a video. Joe Weisenthal did the same thing. And this is such a great example of how we behave.
Have you done it yet or not?
No.
Okay.
We don't celebrate good news. By the way, I saw gas for $2.79, I think, or $2.89, whatever it was. Is anybody championing low gas? Does anybody give a shit? Do we only talk about things when they're bad? We have actually driverless cars.
It is pretty amazing.
And nobody seems to care. Maybe it's because probably because it's not happening where we are. That's probably why I don't hear about it.
Getting back to that boom book, this is a form of progress. If this actually happens and it's a real thing.
But it is real. It's happening. It's happening in multiple cities, and I feel like it's not getting the magical coverage that it deserves. It's holy shit. They're driverless cars.
Like 150,000 rides a day or something. Is that the deal? It is. When does this become a political issue? Where in the future people say, I'm not driving one of these fancy cars, I'm driving my truck. And that's it. It becomes a political issue eventually, right? Like there's going to be the non-drivers and the drivers. I feel like those are the two groups.
Everything becomes political. But but we're not talking about it enough. It's amazing. Shout it. Why do I keep saying self? Driverless cars. Self-driving cars. That's what I was trying to say.
All right. I got a lightning round of vacation thoughts for you.
There we go.
All right. I got a lot here. So I'm going to throw a bunch of them out to you. Then I have a big one at the end. So I'm just going to stop me if you want. I had my first real experience of being a middle-aged dad on vacation. We go to the airport. My wife buys a hot chocolate for my daughter, and they gave her 2 on accident. So she just got 2 of them. She gives one to our youngest and one to our oldest. And says, here. And I said, wait. And we just sat down at the gate waiting for our flight. I said, that's a terrible idea. Every time we give them hot chocolate, they spill. My wife's like, it's fine. Just let them have the hot chocolate. It's vacation. And of course, immediately, all 3 kids have hot chocolate all over them. Spilled everywhere. It's on the seat. It's up their pants. Everyone is covered in hot chocolate. And my wife's trying to clean it up. And I said, I told you. And I just had to be the dad that said, I told everyone, but I get no credit for it. So that was my dad moment.
Wait, hold on. Question. Like, did you yell? Were you annoyed?
No. I smirked and I said, I knew this was going to happen. As the dad, I knew this was going to happen. I just want to put that out there and let it be known on the record. I said so. And then everyone said, yeah, whatever. We don't care. We'll move on. Number 2, why do so many faucets now don't have the H and the C or the blue and the red for the hot and cold? You get into a hotel shower.
Such a great point.
And you have to stay there for like 60 seconds and turn it this way and wait, and turn it this way and wait. And you can't just give me an H and a C or a blue and a red.
Bring back the blue and the red. Ben,
yes.
you're making sense. Keep going.
All right.
I love it.
We're at an all-inclusive resort in Punta Cana. Why do we not have all-inclusive resorts in the U.S.? Food, go get it. Booze, go get it. Fridge, stocked every night with everything you want. I'm guessing.
Because we can get away with it.
Well, I'm guessing part of the reason is because the labor is so much cheaper. So on a cruise, you go on a cruise, you pay for drinks, but the food is just free. Not free, it's part of the thing. I can't imagine there wouldn't be a premium resort that people would pay for in the US for all-inclusive. Just you show up and everything's taken care of. Just having that stress off your back of not like, I have to sign for my bill, figure out what this costs.
Oh, wait a minute.
I'm going into it the all-inclusive.
But I'm going the other way because generally, if you have an all-inclusive place, you can't have the highest quality ingredients for the food. So it has to be cheaper by definition.
True. Although food's pretty decent. I mean, it's not top shelf, but it's still pretty good. 3, I made this joke on Bluesky the other day. I got a little engagement. I love going to an island nation like this and they have their own beer. So we have Presidente here. I went to Aruba before. It's Balashi there. They just make their own beer. Like you don't have choices. Like not Corona or Dos Equis. It's here. You're drinking Presidente and they call it Dominican water here. It's like Steve Jobs with a mock turtleneck wearing the same thing every day. Like I don't have to think about it. I just know, hey, I'm getting a Presidente when I go to the swim-up bar.
So wait. So when you order a beer, do you just say, "Can I have a beer?"
Yeah.
Because that's awesome. Because that's
know
great.
what it is. The best time to do a tequila shot as a middle-aged person, middle of the day. Not at night, because but middle of the day. I got some FOMO the other day. I saw a million people doing shots during the day. And I went to get a beer and I ordered a shot of tequila. My wife goes, "What are you doing?" I go, "But just doing a shot of tequila." She goes, "Why right now?" I'm like, "I don't know, because we're on vacation." So I ripped a shot by myself. All right, here's another one. Lazy rivers are an elite vacation activity. And more places should have lazy rivers. If there's income inequality and you're a rich person, like, why wouldn't you put a lazy river in your backyard instead of a pool? This place has a lazy river, and it's amazing.
I don't think I've ever been on a lazy river. Describe this?
It's just, they have tubes, and then they have things that push you and waterfalls, and you kind of just sit in the tube, drink in your hand, and the tube goes around this huge thing all the way around the resort.
Oh, that's great.
Kids love it. Parents love it. Teenagers love it. Even the grandparents love it. People are just floating around the lazy river. Elite vacation activity, because you can relax or have fun.
Is this a Carlson-wide family vacation?
This is, no, my wife's, so my mother and father-in-law, it's our 50th wedding anniversary. So we even have the t-shirts, 50th, and they took everyone. My brother-in-law and his girlfriend are here, and my wife and our kids, so there's 9 of us. And so this is celebrating their 50th wedding anniversary.
Very nice. All right, keep going. I'm enjoying this.
All right. You know when you go to Chick-fil-A and you realize how much better the service is there, and they say, "My pleasure," every time they serve you?
I don't go to Chick-fil-A though.
Okay.
No.
So the service there is 10 times better than any other place. I feel the same way with service in the Caribbean. So when you come down here, the service is amazing. Everyone always has a smile on their face. They're always happy. The service is top-notch, and it's so much better service than you get anywhere in the States for anything. Everyone's always happy. The people are walking around singing and dancing. And all right, one more. We did an adventure yesterday. I sent you some pictures. We went to go in the jungle, like 45 minutes away. We did a zip line course, these huge long zip lines, which was really fun. And then afterwards, we got to hold these monkeys. And they give you a bunch of food, and they put it on a plate, and they put it on your head, and the monkeys jump all over you.
Those monkeys were adorable.
Squirrel monkeys, I guess, very cute. And so we drive about 45 minutes into the middle of the jungle in the mountains to get there. And it's going through all these little cities, and the guy is on the speaker on the way there talking about the country and telling us about it. And all these little houses you pass on the way, these little shacks, they're not even houses. They're probably 200 to 300 square feet. And that's all there is these houses. And it's a lot of poverty in the country. And the guy was telling us about it. He's saying, "See these houses here? Those are middle class." And you look at them, my kids are like, their eyes are wide going, "Oh my gosh." And every mile or two that he'd that's the rich person. They own all the land. And all the other people just live here. They don't have any cars. They kind of get bussed everywhere, and the houses are very tiny, and there's a lot of trash, and it's just not very nice in these places. And the guy says, "I think Americans look at this and they feel bad for us, and they probably should in a lot of ways." And I looked up the median income here, annual income here is like $8,000 or something. That's what I found on the internet. And the guy says, "You know what though? We are pretty laid back and no stress." He said, "We never have any stress here." And it is funny, they're so happy. You could never go from the lap of luxury that we lead in America and move into that setting. But the fact that they don't know any different, I guess, for the way they grew up, and everyone here is so happy. And that's the crazy thing to me, is that even with all those luxuries, this is the happiest people I've ever seen. It's kind of crazy. And the guy said, he said, "We don't have stress here. We are not stressed. We hang out, we drink, we relax, we have family. We don't live nice lives, and we're no stress."
Yeah, no capitalism.
It's kind of, and he was talking about the property taxes too. And he said, one of the reasons things are so bad on the infrastructure here is because we don't pay a lot of property taxes. He said, you pay one-time tax when you buy a house, and then if you pass it down to your kids, they don't pay a tax. So he's like, "I'll give my house to my daughter someday." Yeah. They don't pay taxes. And he said that's one of the reasons. But he said,
well, again, one of the diseases of capitalism is the desire for more. And it's great for all of us, but it's sort of tough on each of us because we always want more.
It's one of those perspective things that, anyway,
for sure.
That's all I got for my travel thoughts.
All right. The Boardroom tweeted, thank you for that, Ben. That was great. Boardroom tweeted, "New York and New Jersey are in a league of their own when it comes to sports betting. New York did $2.33 billion in money wagered, I think, so far this year. Is that what it's showing? I've been thinking about this. So I've been hot and I've been cold.
That's
I go up and I go down.
Crazy, though, that it's that much more money. Do you think it's all finance people, or just everyone in New York just has that mindset?
I don't know. Yeah, I don't know. I got hosed this week. Tough week for me between the Commanders and the Texans, and who cares? But anyway, so I was thinking let's say that I lose 5 cents of every dollar that I bet. I've been as good as 3 cents, settling at 5 cents ish. That's the tax that I pay. at some point I'm gonna have to stop gambling, right? Like, because with each
constantly paying the vig.
Yeah, like with each passing week, month, and year, like even if it stays at 5%, the number is just going to keep getting bigger and bigger and bigger. And all of a sudden, I look at my account and be like, wait, it's not that much fun.
So this is a good
like,
rolling into it.
Where does this go? Like, there was an article in Bloomberg about like betting in Brazil, and there's a higher level of poverty there, so people are really stretching to gamble. Like, it's like the lottery on steroids. I wonder if like regulation comes back in a way, and the idea of regulation coming in sounds like laughable now, but is this going to eventually become a problem in our society as well? Like at large, like not just, of course, people's lives are getting ruined by gambling. That's not new, but like, is this going to be the type of thing where like we have to crack down because it's like start to spread?
Maybe there'll be more gamblers anonymous. I think it's just going to be the kind of thing where someone goes, well, that 10% of the population has an addictive personality. They're going to get addicted anyway. Hopefully we take care of them. And I don't think people are going to care, unfortunately.
Yeah, I think that's probably right.
So this is a funny email. I came to Animal Spirits a couple years ago and decided to listen to the first episode this week. Pretty funny hearing Ben reveal his Bitcoin ownership. I forgot this when I talked about it. And Michael saying he doesn't trade stocks and hopes he never will. Now you're talking about gambling. I thought that was pretty funny.
Wanted to get your thoughts on an email etiquette situation. Big email etiquette guy over here. Someone reaches out to you asking you to provide times you have availability for a meeting. You respond to that person saying that the times you are available. And then they respond saying, this time and day works for me, but they don't schedule the meeting. It feels weird that I now have to schedule the meeting that they originally asked for.
Yes, if
100%
you say
right.
If you say the 15th at noon works for me, then you have to say, I'll send an invite.
Yeah.
Yeah. Or you just send the invite. Yeah.
Okay. All right. Another good email. I started reading Extra Life, A Short History of Living Longer by Stephen Johnson. By the way, Stephen Johnson, great author. If I ever read nonfiction again. By the way, I was looking at my book the other day. And I'm like, oh man, there's a bunch of books on my shelf that I haven't read, like I would love to and been meaning to. But realistically, I don't know if it's ever going to happen.
It's hard. I do get most of my reading done in an airplane, but it's hard to find the time anymore.
Who has 40 hours or however many hours? I don't know how long it takes me to read a book, but like,
it's a lot.
I don't have that time. Okay.
I'm going to start a new publishing company called 100-page books. Nothing more than 100 pages.
It masterfully tells the story of how human life expectancy has grown over the last 400 years. And anyway, the point is, one question this all got me thinking about, at what point in reading a book is it fair to recommend it to someone else? Halfway, fully read? Such a great question because, Ben, I've got a show that I started that it's called Man on the Inside. Now, it's the #1 show on Netflix, so it's probably safe to recommend. It's Ted Danson. Are you familiar with this?
No, I haven't watched it. I've seen it on the ads.
Okay, I laughed out loud 3 times in the first episode. 30 minutes, pretty good sign. The second episode, third.
I think for a book, you have to go all the way through. You do feel, because I've done that before. I've been halfway through a book and I said, you have to read this. And then it kind of tails off and you go, oh, shoot, I jumped the gun on that.
Okay, but I think that happens with shows all the time too.
Yes.
Right?
We finished The Old Man on FX, second season.
How was it?
I liked the first season. The second season, it was the total horse meme of great horse.
Nailed
cartoon.
Nailed
it. The end of the season, it was just, the show ended. My wife and I were like, wait, what? That's how it, and Jeff Bridges and John Lithgow, and it was just, ugh.
Did you watch The Penguin, by the way?
I'm halfway through it.
Okay.
I like it. I'll save my thoughts when it's done.
Ben, recommendations, what do you got?
Okay, so on the way down here, I watched Deadpool versus Wolverine, and I texted you, and I said, this movie is totally unnecessary. It doesn't need to happen, but I still enjoy it. It's very entertaining, a very good plane movie. It's just Ryan Reynolds for 2 hours, just riffing, telling jokes. And it's, again, totally unnecessary, but I can't believe the amount of celebrity cameos in it. There is a ridiculous amount of big-name celebrities in this movie.
So this screams airplane movie.
Definitely, and I was laughing. My kids kept being like, what are you laughing at? And I'm like, oh, it's Ryan Reynolds. He gets me. And
he tickles your funny bone.
His sarcasm is just perfect. And yes, again, it's like the whole movie doesn't necessarily have a point. It's not necessary, and it's still funny. I finally
necessary.
I mean, it's yeah. But as far as superhero movie goes, I would rather watch that than it's so self-aware that it's really well done.
I was about to say, is it necessary that I drink my own urine? Which is a joke that I've used on the show multiple times.
What is that?
I know you're not a dodgeball fan. It's
okay.
Patches O'Houlihan.
Okay. I finally finished Slow Horses season 4, and it's the worst of the seasons, and it was still a great show. The last episode was great. Hugo Weaving plays the bad guy this year. Really good twist at the end. It's just, I think it's the best. I think Gary Oldman gives the best performance of any TV actor in the 2020s. He is amazing as Jackson Lamb. Gary Oldman is amazing in this, and no one watches the show, I feel like.
Okay.
It's the best show on TV right now. It's the
Okay.
best show
You know
on TV.
what? I respect you for saying that. I'm going to dive in. It's
right,
been on my list.
Just give it the first, and each season is 6
Whoa,
episodes.
whoa. Give it what? Give it what?
But I'm just saying give it a shot because it's only 6 episodes.
Okay. I thought you were going to say like give it 4 episodes until it gets going.
The first one starts after the first episode. It's off and running.
Okay. So the guy who we met last week at the Chicago live event, his name is not James, it's Brian. And Brian emailed us with a list of movie recommendations, all like these horror movies that he likes to watch. And one of them, this killed me, was Dude Bro. Am I getting this? It's Dude Bro Massacre Party 3 or something like that. Dude Bro Massacre Party 3. And he wrote in parentheses, there is no 1 and 2.
Okay.
I did not see that movie, but shout out to Brian. Okay. I tried to take my kids to see Wicked on Sunday, and guess what?
Sold out?
Couldn't get seats. The only seats available were like first row, and there was one theater had a time every single half hour. So I'm
surprised that you don't walk into the movie theater like the regular, like at Cheers, and they go, "Hey, Michael, take your usual seat in the front."
You love to see it, and it's getting great reviews. So
my kids can't wait to see it. My wife took them to see the play, and they love it, so they can't wait to see the movie.
So I'm going to take them on Friday. So Eric Davis tweeted, Wicked wins the weekend with 114 million domestic, 164 million worldwide. That is the biggest opening ever for a Broadway adaptation, the 3rd biggest opening of the year, and the 4th biggest opening for a musical worldwide, and the biggest pre-Thanksgiving weekend since 2013. And also, Gladiator did some numbers at the box office. It's getting mixed reviews, which makes me sad. I haven't seen it yet.
I will see it, but I kind of wish they didn't do it.
Well, okay. So, there's a new Taylor Sheridan show on Paramount Plus. At least that's where I'm watching it. Called Landman. It's with Billy Bob, John Hamm, Ali Larder. Remember her from Varsity Blues?
Oh yeah.
She's now much older because we're much older. I don't know if I'm allowed to say this without getting in trouble, but this is. You know what? I don't know why I wouldn't be able to say this. This show is more for men than for women. Okay, it just is.
I would probably say most Taylor Sheridan shows are.
Okay.
I'm almost ready to give up on Yellowstone.
You're still watching?
It's the last season. I thought I'd give it a try, but
okay.
I mean, the guy does like 12 shows. How can any even be that high quality? I give him credit for doing it, but
first few seasons of Yellowstone are some of my favorite television until it horse.
I don't think I'm going to try Landman. I'm sorry. I've watched a bunch of his other shows. I like the prequels to Yellowstone, but
the quality's not that great. But it's fun enough.
Entertainment, okay.
It's fun enough. It's brain candy or brain garbage. I don't know.
I can't believe we made it on this because I'm doing this podcast from the 3G cell phone network here because the Wi-Fi was a little spotty on my phone. Can you imagine that? We can do internet from our phone in a different country to do a podcast.
It's wild.
Right? Yes, I made it. All right. The lazy river is calling me.
All right, Ben. Enjoy. Thank you very much for taking time away from your family vacation, listeners.
Listen, I needed a break from
Thank Ben. You can thank Ben by filling out the survey. All right. Animal Spirits at the Compound News. Personal emails, personal responses. If you emailed us before, you know what I'm talking about. Thank you, everybody. Thank you, Duncan, and the rest of the team for producing this as always. We will see you next week. Oh, wait. Happy Thanksgiving, okay?
Yes.
Happy Thanksgiving. This is a great time of year to be with your family.
Go Lions. I can watch the Lions here too.
To watch the Giants get destroyed. And I'll say this out loud, Ben.
Oh, the Giants are playing too.
I'll say this out loud. My highest conviction bet of the year. Okay. Money line Lions, money line Cowboys. It's minus 130, so there's a bit of a vig. If this doesn't work, I'm putting multiple units on this. If this doesn't work, I'm going to hang my cleats up for the season. How about that?
Just be careful. The Lions have been known to blow games on Thanksgiving, but I'm fingers crossed we're a new team.
The Bears are not going to score more points than the Lions, and I'm pretty sure that's how football works.
All right. See you next time.